Hey everybody, it's Clayton coming back with a new episode. In this episode, I want to focus on if the market's going to continue to go up, is it going to suddenly fall, what the experts are saying, and basically just go on that and touch on my portfolio. And today, the market closed. Today's Tuesday, 26th. You're seeing this on Wednesday, or possibly later. The market closed almost up 600 points today, and let's just go look at it. It was at 529. Sorry, I know at one point it got up to 176. Then it kind of petered off near the end, so it finished just below 2,500. And as we've seen, obviously over the last short while, the market has jumped. Let's go to the last month. Actually, yeah, 6 months is a little farther back. Doesn't let me go further, but you'll see just from March 20th and today's May 26th. We've already gone up 6,000 points in 2 months, and the growth just seems to be continuing. And I really want to touch upon what the experts are saying as to why they think this is happening, if it's going to continue to happen, and things like that. But first thing, as always, I want to dive into portfolio. We had a few new purchases this last week. You can see in the activities, we had 9 buys, and we got more of Coke, Pepsi, Verizon. I didn't add anything new to the portfolio. We got Coke, Pepsi, Verizon, 3M, Target, Walgreens, AT&T, Realty Income Corp, and SPHD. All stocks that I really enjoy, I really like, and I'm confident in. And I've been speaking to a lot of you guys on Twitter. I really appreciate the feedback, and I appreciate the interaction. Honestly, on Twitter, it's been very fun to talk to a lot of the people that watch this channel. And if you would like to interact with me, my Twitter link will be listed below. And as I say in the beginning of almost every video, I really want to thank you guys for the support. And before I dive really into the heart of this video, if you'd like to subscribe, feel free. Truly appreciate it. We've been growing at a pace that I thought was remarkable. And I'm not really going to gush over that. I did it kind of last video, and I tend to do it every other video. But if you like the video, please drop a like, smash that like button, and subscribe. I would greatly appreciate it. So as we talked about for a few minutes, we talked about the Dow Jones and how the market kind of has been going up consistently for the last month now, and how it passed the 25,000 mark, but it petered under a little bit just before, and why this may be. So I was looking through and reading a bunch of articles as to what people think, and again, nobody really knows. They're guessing and making assumptions. But the reason what I've come to kind of lead to is this article I saw on CBS News, and everybody kind of has the same thing. But the 3 main points are being that states are reopening. So the lockdown brought a huge stall when it came to how states were covering themselves and what was going on in general, and just the money coming to the states, as everyone knows that lives in the United States and abroad. Honestly, you see with your country too if you had shut down. That is one big reasoning. The other one is the consistent updates with this vaccine and treatments. Every day it seems like they're coming out with more news about a vaccine that's going to be released, not soon, but they're working towards, and better treatments and lower numbers. Obviously, with the reopening, who knows, honestly. And the other one that I thought was very interesting, but also very intuitive, is it shows, right, like it says on the screen, easy money gets easier. As we were talking about, basically, with the Fed openly opening their wallets and giving out money to help those in need, it is giving more money that can be put back into the economy, because this money's not going to be taken back from the government once this is all over. And obviously, a lot of people needed this money and has needed help. Also, with the lowering of, excuse me, when it comes to the Fed cutting the rates, and just everything they've done thus far has increased the money that's going to be going into this economy very quickly. And I want to play a video for you that was on CNBC from Wharton cycle. Just listen to him.
Okay, I agree with you 100%. I've been saying this for weeks. The liquidity that was created by the Federal Reserve is totally unprecedented, far exceeding that of the financial crisis. M1 money supply in 8 weeks is up 25%. I have never seen that, and I absolutely agree. There's no way they're taking that back. And as a result, that is all going to be flowing into the stock market and the economy. And I'm still one of the few voices out there that think that we're going to have inflation in 2021. Nothing double digit, nothing hyperinflation. I'm not talking about that. But for the first time in over 20 years, this liquidity, this money is going to find a place to go, and it's going to, and that's what's happening right now. The market sees this happening.
I hear you. I mean, there's no denying that, Professor, liquidity has gotten us to S&P 3000 and Dow 25,000 again. But if we're going to hit new highs this year or early next year or whenever we do, if we do, aren't you going to need the fundamentals of the economy to start playing ball with the liquidity?
Well, they will. I mean, I think they will. I mean, obviously, I do think the market will hit more new highs, but certainly before the economy does. It's really going to be lagging. You know, should we be that disturbed about? I mean, we're talking about like the politics of envy, like, oh my God, I'm still suffering. The market's hitting new highs. I mean, I think there's going to be a recovery all the way around, and we're going to all be thankful for the recovery that we've had. Listen, the good news is still coming on the vaccine antiviral front, that we can avoid a second wave, and I think that's a key thing. That's a key issue, I think, that will really motivate the election as well as what's going to happen to the markets in the fall.
It's somewhat perverse, though, no? I mean, you've got 25,000 on the Dow, 3,000 on the S&P, and 30-plus million people out of work, Professor.
Yeah, I hear you. Listen, I think in retrospect, we will look at the lockdowns as the wrong policy. Social distancing, masks were right, and the CDC was really slow off the mark on that. You know, we could have kept many more enterprises open and relieved much of the seriousness, not all of it, of course. But you know, history will show that we really, unfortunately, did not follow the right policy.
Now, I'm not really going to go into the did we follow the right policies thing. That's more of a political stance. I'm not really going to take on this channel. I'm just focusing strictly on the market. And there was another part of this interview that wasn't shown, but he even talked about it, and here's the exact words if you want to read them on the screen. In fact, given no serious second wave, which could mean just effective therapeutics without even a universal vaccine, my feeling is it's even a likelihood that we will reach fresh record highs. Meaning, so what we saw before this whole situation, let's just say it as that, happened, he thinks that it's very likely that we're going to reach new session highs, possibly by the end of this year, that we've ever had. So then the answer to my question that I said to start this video is, great, we're going to keep going up, and the market's going to continue to grow. But then you go to somebody else, and there's a great article by the Motley Fool. I will link it below for anyone that would like to read it. But it's essentially Warren Buffett, somebody that many people look into as to someone that people dive in, look into as a great investor and someone that they follow as he does the market. And he has a very, very famous quote that many of you have probably heard, but it's to be fearful when others are greedy and greedy when others are fearful. And if you've noticed by how he's doing with Berkshire Hathaway, he has sold a lot of the stock that he was holding. He's made, from what I've seen, I haven't seen a lot of buys that he has made. I think he's sitting waiting for one reason or another. But that's what you're going to find when you look right now during this market. Realistically, nobody knows. And that's the gist of this video. And I hate that it's summed up that simply, but nobody really knows. Some experts are going to tell you that the market's going to bounce back quickly. You're going to see a V shape. Some markets are saying it's going to decline relatively soon. The economy's going to open up slowly, and that's going to then become reality. And people are going to realize that this boom in the economy was just kind of a hope and a prayer. And some have no idea what's going to happen. They're openly admit they're not sure how to read this market. So for anybody that's investing, either new to investing, dividend investing, anything like that, this is why I continue to say, and I've said it in, I can't even know how many videos now, it's essentially becoming a catchphrase. I should make a shirt with it, honestly. But this is why I dollar cost average. Because nobody can time the market. It is nearly impossible to time the market consistently. We've seen previous videos, and I've linked it in the past, and I'll link it again in the top right corner, of why dollar cost averaging works better than trying to time the market. And I know for a lot of you listening, actually, you know what? I'll take that back. I know for some of you listening, because I've already heard it through people, private messages on Twitter and through email, that you're upset that you did not buy when the market was a little bit lower because now it's starting to skyrocket again. and you're kicking yourself because you didn't buy when the market was down 1,000 points from where it was now, or 2,000 points ago, or 3,000 points ago. But the problem is, this is why I keep saying dollar cost averaging. Yes, the market may very well crash or fall another, and back to where the lows were, or go even lower. Maybe it hits 15, 16,000. Or maybe the market by the end of July or August is at the 30,000 range and it's breaking new highs. Nobody knows. And for you to sit and try to time the market, all you're doing is letting opportunity pass. And especially as a dividend growth investor, the value of the stock right now means you obviously want to get the stock at a good price, and you want to get it when, if it's undervalued, you don't really want to pay when it's overvalued. But in the end, your goal as a dividend investor is to get the stocks that are going to perform well for a long period of time. And if you can get them at a discount, fantastic. But in the end, the stocks you're picking up, ideally, are going to continue to grow either way, regardless if the market hits record highs or record lows. So that's why I've said in previous videos in the past, dollar cost average, dollar cost average, dollar cost average. And I'm going to keep hammering it home. If you don't like hearing that, I'm sorry. I'm not the channel to listen to, because I'm going to continue to say that over and over and over and over again, because it is how I truly feel, and it is what I think is the safest way to invest. Though you may not hit the market at peak times, you may not catch it when it's at its lowest point, I can guarantee you, you're not going to miss it. That's one thing you're not going to do. You may not hit it at its lowest, but you're definitely not going to let it fly by you and miss it and hit it once it's 6,000, 7,000 points higher than where you wish you would have bought in. So if there's one message you can take from this and you're still watching this video, first off, thank you. I appreciate it. I appreciate the feedback from everybody. But please know this is a long, long, long game. And if you're in the market right now or watching my channel because you're trying to make profits in the short term, I may not be the channel for you. Obviously, I hate to say that to anyone, possibly lose viewers, but I'm strictly a channel built on dividend investing. That's what my strength is. That's where I put my research. That's where I've read my books. That's where I've gained all of my knowledge, is through dividend investing. I am not someone to ask when it comes to day trading or short-term investing, because honestly, that's not information that I've properly learned or tried to take in on how to understand and present to you. And so I do thank everyone that's still here. As I said earlier in the video, please feel free to subscribe if you aren't already. We're already at almost 220 subscribers. I can't gush enough. I hate that at the end of every video I'm gushing, but it really does mean a lot to me right now, especially going with what's going on. I've been at home now for 2 months, so it's nice to just honestly get interactions with people besides my family. Though I love my family, don't get me wrong. But it's just nice to see the input from the community. And if, like I said before, my Twitter handle will be linked below. And if you'd like to email me and ask a question privately, feel free. That is at ClaytonsCash89. That's ClaytonsCash89 at gmail.com. And I will gladly take questions there, or you can private message me. I've got plenty of people that have private messaged me and asked me simple questions about dividend investing. I may actually make a video about the basics of dividend investing, because I've seen from a few people that watch my channel, they've actually got very basic questions that I don't think I've ever gone into. I've kind of gone into this video expecting people to understand, if they're watching me, what dividend investing is, or just how you dividend invest in the basics, essentially. So I may make a video in the near future for that, because I have noticed that a lot of people have reached out asking questions. And if you're one of those people, I hope I was able to explain it. I definitely want to take my time and break down as much as I can for you, and I'll try to answer as many questions. If you've got more, please feel free to DM them to me, or again, just shoot me a message on Twitter. But besides that, I want to thank you guys. I really do appreciate it if you've stuck around this long. And it seems like my new sign-off is going to be this, because I really do enjoy it. And as a Disney fan, it's something that's always stuck with me. So I thank you guys. I hope you guys have a good rest of your day and good rest of your evening. And y'all come back now, you hear?